Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and what we're going to talk about today is Jeffrey Epstein. What does Jeffrey Epstein have to do with the stock charts that we're going to be going over in a brief moment? It has everything to do with it. It has to do with power. And I'll discuss how power will keep this market from going into the tank prior to the 2020 elections. Then we're going to segue over and into the stocks that we're watching, or the stocks, ETFs, etc., that we are watching for the coming days and the coming weeks. And in the coming weeks, what we're going to be looking to do is to develop a strategy for shorting this market. That's right. At some point in time in the fairly near future, within the next year or so, we are going to need to look to the short side of this market, because this market is being held up by shoestrings and bubblegum. So what are the shoestrings and bubblegum that are holding this market together? It's called the plunge protection team. That is when Treasury and the central bank get together and they begin to prop up the stock market. And that's what you saw last week, because we were rolling over and we have a ton of catalysts to send this stock market lower, which brings us to Jeffrey Epstein. Jeffrey Epstein attempted to commit suicide. This is the accused pedophile, human trafficking leader here, who is so adored by the so-called globalist elites in this, not just the country, the world. He attempted suicide not a month ago. And fast forward to the day after the publication of records naming names, prison experts are stunned and angry that Jeffrey Epstein was taken off of suicide watch. They took him off of suicide watch. Who has the power to do that? And why would they do that? Do you think that Jeffrey Epstein would have grabbed that reduced sentence? You're darn right. Fast forward to Attorney General Barr appalled by Epstein's apparent suicide, says Inspector General and FBI investigating. FBI investigating. You mean the same people like Peter Strzok, Lisa Page, they're going to be doing the investigation here? I don't think so. I'm not going to be all that worried where I named in these documents about any indictments coming down anytime soon. Dead men tell no tales. There's a lot of power out there, and they will keep this market in check, absent the invasion of the Chinese of Hong Kong, or the collapse of a major money center bank, HSBC, Deutsche Bank, to name a couple. The European banks have a lot of problems. Absent events such as those, we have little to worry about this market going into the tank before the 2020 elections. So now let's go to the charts. Okay, so the game plan here today with the charts is to, with those who are not members, to discuss the charts that we're looking at for the coming week and why we like them. So this is what you call the best stock charts summary discussion. After this summary discussion, what we're going to do is segue over and into the deep dive of the strategy that we will employ to enter these positions with members. Now, yesterday, I already posted in the members area the week ahead commentary. That's our analysis of the health of the overall market, as well as a review of our positions. We did do some buying last week, and today we're going to do the best stock charts deep dive, and I will post that in the members area. So let's get to it. I have 4 potential long trades that are continuation breakout trades. Then I have another 4 that are extreme oversold stocks with RSI well below the 20 level and are very interesting to the long side. And then I'm going to go over 2 potential short trades as well. So let's begin with the continuation breakout trades. We'll go to a weekly chart. So we're going to go first to the ITB, which is the U.S. Home Construction iShares weekly view. And you can see that we have a nice inverted head and shoulders going on here. Here's the left shoulder. Here's the head. Here's the right shoulder. We're looking for a breakout. Our RSI is looking very good with higher lows, and we're looking for higher highs. We'll talk about when we would want to enter this position using a daily chart with members on the week ahead commentary. And to validate our resistance levels above, what I want to do is just throw over a overlay of support and resistance, and you could see that we flirted with a breakout last week. We were rejected, and we have resistance immediately above. Okay, so now you can see that we closed right at a resistance level about 3 weeks in a row. We attempted a breakout back here, but were rejected. So we're looking for a breakout here on ITB. The next chart up is UGAZ. This is a symbol that's been floated around our forum. We're consolidating nicely along the weekly support level. We have higher lows being put in on RSI, so it's looking very interesting. So we'll do a deep dive into the daily charts of, perhaps even the intraday charts of UGAZ on the deep dive with members. ITA, a nice reversal week last week. We have a bit of resistance above here, and that's good, because what that provides us is a clear and distinct resistance level of which we need to see the shares close above before we enter the trade. RSI drifting higher. Stokes beginning to flatten out here, a probable higher low. So we'll talk about strategy of as to when we want to enter this position with members on the best stock charts deep dive. And that's going to be coming out in a short while, members. Let's talk now about extreme oversold stocks. Groupon. I love this company. I use them all the time. We'll go to a daily chart for the extreme oversold stocks, and we'll talk about the reasons why we like it. We have RSI down below here at 14.63. Very, very oversold. Stokes are beginning to flatten out. The question is, with extreme oversold stocks, is where is historical support? Because I see that I have RSI below 20, but that doesn't matter to me. What matters most is where we have historical support, if it does in fact exist. And if it does not in fact exist, we need to leverage the intraday charts, meaning the 2-hour, 4-hour chart, to give us an early warning of as to when we're beginning to see positive divergences on RSI, and that will give us a clue of as to when we should begin to nibble on the shares. But right now, this is not a time to buy. I think that the shares, in all probability, are going to go lower. So members, more to come later on today. Carbonite. I spoke about Carbonite, I believe it was last week or the week before, as an extreme oversold stock. I said it would probably go lower, and it has gone lower, despite the fact you have RSI at current still sitting below 15. Guess what? It could go lower. So the question then becomes, where is historical support? Again, we want to pull back. We want to take a look at weekly charts, monthly charts to identify where our best risk-reward entry point is before we got involved with this trade. Now, will this become an investment? Will Groupon become an investment? No way. All we want to do is take advantage of the multi-day short squeeze that any rally should provide us. And then we want to move to the sidelines. We want out, because we know from past experience that weak stocks tend to get weaker, but not before you have counter-trend rallies. Let's take a look at Clear Channel Holdings. I spoke about this one, again, I think it was last week or the week before. We've just been watching it. And this is a daily chart. And we're beginning to see signs of life. You saw a bullish key reversal on Thursday, then again on Friday. The question is, on a weekly and monthly basis, do we have historical support below? We have to do a pullback. We have to take a look at the weekly and monthly charts. You can see here that RSI is beginning to hook up. That's bullish stuff. So is Stokes. So we may be very close to pulling the trigger here on Clear Channel. So members, more to come on Clear Channel. InvestNet. I have little doubt, taking a look at this chart, that in all probability we are going lower here. We did not put in a new daily low on Friday versus Thursday, but I think that we will press lower because on Friday we closed right at the lows of the day, and that does not bode well for next week. RSI on a daily basis is at 16.87, oversold, but we know it can go lower because weak stocks tend to get weaker until they don't. Now, we are flirting with the third standard deviation Bollinger Band, and that's the reason why the shares popped on Thursday. We were extended. We were leaning into the third standard deviation Bollinger Band. For those not familiar with the third standard deviation Bollinger Band, it's not the same Bollinger Band that you get from your out-of-the-box trading software. That is a 2 standard deviation Bollinger Band. We like to use a 3 standard deviation Bollinger Band. It's a higher level. And in short, to save on the jargon, it's not supposed to be here. So as we continue to lean into the third standard deviation Bollinger Band, the probabilities of a rally increase, especially as you have RSI at unsustainable levels. Now, unsustainable is a fluid concept. It could remain unsustainable or, air quotes, oversold for a few more trading days. So again, as with all of these trades, we want to know where our historical support levels are to identify the best risk-reward entry point. And of course, we want to know where our upside potential is. And to do that, we identify on a weekly and monthly chart historical resistance levels, because those are the levels that we want to set our sell orders at to get out, book our profits, move to the sidelines, because we have no delusions of grandeur. These stocks, in all probability, are not going back to all-time highs anytime soon. Too much technical damage has been done. It's going to take months of backing and filling before you find fair value. Then you build a base, and then you begin to climb that wall of worry back up yet again, hopefully. And in some cases, there may be ongoing concern issues. Now, before we shut this out, I want to talk about shorting this market. I opened up this commentary with a review of Power, just how manufactured this economy is, and just how corrupt the media is. They will find some way, somehow, again, absent a big bank going down, absent the Chinese invading Hong Kong, they will keep this market in check vis-a-vis the Federal Reserve, because God forbid they ever get an economic plan in place that would reduce the size of government and that would cut spending. That is not going to happen. Not before the next financial crisis anyway. And it is coming. As sure as God made green little apples, it is coming. So when it does arrive, what will we be looking for? Well, let's begin with the TZA. I brought this up to members yesterday, and I went a little bit long in the commentary, so I never really got to it. Yesterday, Saturday, I was taking a look at the charts on an intraday basis. I said, you know what, let me check out the 15-minute chart. I'm not a big user of the 15-minute chart, but it does give you an indication of where we may open up on Monday. It doesn't necessarily mean it's going to how we're going to close out the day, but let's go to it. 15-minute chart, and you're seeing some strength here on a 15-minute basis, right here. And we came very close to breaking out. We do have a higher low, RSI, higher lows, Stokes, higher lows. This is a very bullish setup for Monday morning for the TZA. Now, longer term, using the daily chart, and I'll talk about the weekly chart with members later on today, but briefly on the daily chart, we'll move on to the SPXS. The shares have been showing topping tails, so you have some selling pressure above. We had an inside day on Friday with some topping action as well, meaning that we closed off of the highs of the day. So while the intraday price action looks bullish, and longer term, we will be looking to put on a trade here by building a position over time, accumulating a position, not just waking up one day and saying, okay, I'm going all in on the TZA. No, we want to build a position, add when we know we're right. And how do we know when we're right? When the shares begin to break up and through resistance levels. We want to buy on strength. The same thing that we did with the NUGT. Let's take a quick look at it. We were buying all through here, when nobody else wanted the shares, we were building a position over the course of months, literally months. And then as we began to break out, we began to build more and more aggressively. And so far this year, one of our best years. Now, since we're on this chart, we are extended here. Please do not go running in and buying these shares tomorrow. We put on a hedge last week using the DUST as we began to see topping action, stalling action on the NUGT. And if you take a look at the shares of Dust, which is a leveraged ETF putting you short of the gold miners, again, this is just a hedge. You can see that we're putting in higher lows on RSI. And as we did not see new daily highs on the NUGT Thursday and Friday, the same inversely is true here for Dust. We did not see new daily lows on Thursday and Friday. So we're beginning to consolidate here. RSI is telling us that, and that is why we opened up a hedge to protect our profits on the NUGT. But on that pullback, we will be adding more to the NUGT. And if you ask me why do I have such conviction and why have I had such conviction over the past several years, I give you 22 trillion reasons and rising every single day why you need to be long of the gold miners, gold stocks. As a matter of fact, I skipped one here, the USLV, which we were long of. I will be on a webinar with TrendSpider. They invited me back on to discuss our USLV trade next Sunday, which is the 18th. So please click the link below if you watch us on YouTube or above if you watch us on the website. I'm using TrendSpider right now. I have a discount code CT25Z. Again, CT25Z to get that 25% discount. So you can see that we're seeing topping action on the USLV. We're probably going to get a pullback here absent a geopolitical event between now and tomorrow morning. So members will be talking re-entry points on the USLV. I want to get back to the conversation with regards to shorting this market. We'll be looking at the SPXS to short the S&P 500. So we'll be short of the S&P 500 and the small caps using the TZA, the weighting of which will depend upon which sector is weakest. At current, the small caps are weaker than the large caps. So were I to open up a short position right now, I'd be shorting more aggressively the small caps. Now, you saw a rally last week, as you saw with the TZA, but we rallied up and into the third standard deviation Bollinger Band, and we pulled back, as one would expect, because we're not supposed to be up and into this Bollinger Band. Now what I'm going to be looking for are higher lows. And I'm going to be discussing with members in a moment the strategy by which we will plan on entering these trades, what our stop loss levels will be, what our price targets will be, how much do we want to put on relative to our long position, and how do these charts look on a weekly basis. Very, very critical to know where we are entering on a historical chart. And that is it for this week, folks. If you get any value out of this commentary, please subscribe to my YouTube channel, leave a comment. I definitely get back to you. We have a 14-day free trial offer to the Contrarian Trader. TrendSpider is included with our silver and gold level memberships. Take advantage of it. Everybody have a profitable trading week and enjoy the remainder of your Sunday. Be well.